Ayo, what's going on, viewers of the tube? If you're wondering where you're at in the tubeverse, let me first introduce myself as Tyler, and you just set your sparkling eyes upon the crypto channel that makes America proud, just like this news anchor.
Hundreds gathered today to say their final goodbyes to this fallen Louisville police officer, D.D. Megadoodoo.
You know how we pronounce, it's time for Chico Crypto. Well, it was a REKT city yesterday, Monday, to open the markets for almost every single asset out there. Financial assets, tech stocks, service industry stocks, consumer goods, basic materials, utilities, shoot, even healthcare took a massive hit yesterday. And unlike I predicted, the crypto markets took an extremely steep dive in which no altcoin was safe. Almost 10% 24-hour losses for almost every single coin. So what the freak is going on? Why are we collapsing in Finance 1.0 and Finance 2.0, aka the crypto markets? Well, let us begin with Finance 1.0. If you watched my video yesterday and then my video posted a few months ago, I foresaw this coming. The similarities between the roaring 20s and the stock market surge of the 2010s was so uncanny. A Great Depression, a Black Swan Part 2 in which America overshot and collapsed once more seemed more likely. Rate cut by rate cut. Well, the coronavirus has sped things up big time and accelerated the need to devalue the dollar even further. Federal Reserve slashed rates after an emergency meeting between the G7 and their central bank governors. As we can see, this was the first emergency meeting since the 2008 financial crisis and was the largest since then too, a 50 basis point cut. Well, did it help? Pulling out the Dow, it did give it a little bounce on the 4th after the rate slash was announced, but by Friday of last week, the reality of the virus kept bringing the markets into the red, but nothing to make them fall off a cliff. So what caused the markets to jump off a cliff? One word: oil. Pulling out the price of oil, it has fallen by over 30% to just above $30 per barrel, levels not seen since a low in 2016, the oil crisis then. So what is this and what in the bejesus happened? Well, this was a deliberate attack against the Petrodollar by countries who have had to play into the United States game of gasolina for almost 60 years now. Since the 70s, when the US dollar decided to officially drop the gold standard and become backed by transactions in oil. Now, if you think I'm talking about the US dollar as the petrodollar being backed by oil, you are wrong. The thing that gives the US dollar most of its value and power in this world is the fact that all transactions for oil must be done and denominated in the United States dollar. I dove into this in yesterday's video, but that nutty Nixon shocked the world by saying bye-bye to gold-backed dollars and befriending the Saudis to create the standard that is the petrodollar today, setting the stage for US dominance as the world became industrialized and the demand for oil surged. So what happened to the price of oil now that US dollars were the base currency? It went balls out ballistic, going from under $20 per barrel in 1970 to over $100 by 1980. Now, since this move by the US, all major world conflicts and events have to do with oil and its price. And the market crash yesterday is no different. So what exactly happened? Well, our president tweeted explaining it. Saudi Arabia and Russia are arguing over the price and flow of oil. That and fake news is the reason for the market drop. Yes, two major oil producing countries, the leader of the OPEC countries, Saudi Arabia, and Russia are going head to head over the price of oil. Well, Mr. Trumper McStumper is actually wrong, as it's not only just Saudi Arabia. Like I said, they are the leader of the OPEC countries. OPEC stands for Organization of the Petroleum Exporting Countries, and it includes countries in South America, Africa, and the Middle East. And OPEC is going to get hard. Stats as of right now put those countries losing over $500 million in revenues per day, with many of the countries not even making break even with these critically low prices. Now, Saudi Arabia can sustain the lower prices because they produce like hail and are pretty close with the United States, but other OPEC countries are going to suffer and suffer big time from this price war. So all of OPEC is just one player, even though the ties between them could blow up at any second. Why? Well, the next player is OPEC's partner in petrodollar crime, the United States, as you can't leave out the good old US of A in talks about oil. We should more say Saudi Arabia's partner in crime, as the relationships between the Saudis and the USA go back to Nixon, and then to Obama, and even to old Trumper touching a weird old globe with the King Solomon of Saudi Arabia, which after this picture, President Trump tweeted this: "Plenty of oil." So the dollar keeps its power by being best friends with the #1 oil producing nation and the leader of OPEC. Well, the United States has been playing into the dangerous oil game. When they released the power of the petrodollar in the 70s, oil production, it fell off a cliff in the US. But since the 2008 financial crisis, oil production in the US has gone into overdrive. Why? The growth of the US fracking industry. Fracking technology, aka shale gas extraction, is digging deep into the Earth's surface and extracting out of the fissures in the shale layer of the crust. Well, we went long on fracking in 2010, and the fracking boom took place in the US. Well, environmental concerns caused a bust in 2015, when Obama decided to say, hey, no frickin' fracking all willy-nilly. Well, in 2017, Trump did away with those rules, once again opening the door. And as we can see from this graph, oil production shook off the 2015 bust, and once again, went into overdrive. But this fracking boom is going to be our downfall, my friends, because at these lower prices, it's not sustainable for the US fracking companies that have been struggling even before the prices dip. And guess what? These fracking companies are all highly in debt, as the energy sector companies in the US are the biggest issuers of US junk bonds. This has been going on since the fracking boom, a surge which from 2005 to 2014, energy companies in the junk bond market grew by 10%, going from 5% to over 15% of the high yield market. Now, junk bonds are bonds that have a rating of BB or below, indicating that they are at higher risk of default than investment grade issuers, rated BBB and above. Well, since 2008, this junk bond market has been blossoming, increasing by over 100% from 2008 to 2018 alone, and energy companies make up a large percentage of this. And even before this oil price war, this energy junk market performed the worst in the high yield junk index for 2019. And guess what? A ton of this investment in these crap companies is using leverage. Since 2008, leveraged loans has increased by 100% as well, just like the junk market, going from $600 billion to nearly $1.2 trillion as of 2019. And who are the leverage loan losers? Even before the oil crash, the oil and fracking companies in the US, the energy companies. So in China, they have a supply chain house of cards. While here in the United States, we have a fracking house of cards. The low oil prices will put massive pressure on the revenues of these fracking companies. Buyers of the bonds who played with leverage will get liquidated. Others will panic sell, and this will make the companies who had to borrow unable to satisfy interest and principal payments. And if things get any worse and more sell-offs continue, many of these corporate bonds are maturing in the coming years, meaning they can't be restructured, and bankruptcies will happen. But there is one last player we didn't dive into, Russia, who is being portrayed as the instigator, the one who wouldn't side with the Saudis and agree to cut their oil production, keeping oil prices artificially high. Yes, the meeting between Russia and Saudi Arabia was made for an agreement to happen, where Russia and the OPEC countries would all agree to cut oil production due to the coronavirus cutting global demand. Well, Russia previously worked with and sided with OPEC, but over the weekend, talks broke down. Russia said, nope, we will keep our productions at these levels. So the Saudis said, we will too, and actually increase ours. Now, this was supposed to hurt Russia, as oil is one of their biggest sources of global revenue. Roughly 35% of their federal budget comes from oil today. And the last time there was a global oil war of this scale was from 2014 to 2016, and Russia back then suffered greatly from it. It's one of the reasons they made a pact with OPEC before the breakdown of talks over the weekend. But this time it's different. It seems like Russia knew another oil price war would come, and they just needed to play their cards right in the future. This Bloomberg article, put out in August of 2019, tells it like it is. Russia to leapfrog Saudi in wealth league as oil power shifts. And in the article it says Russia's bank and cash reserves were about to pass Saudi Arabia's, and they didn't have this back in 2016. What else has Russia been stockpiling besides cash? Gold. Yes, Russia has been stockpiling gold too. The central bank has gone on a buying spree with no slowdown. Even today, they are the biggest single purchaser of gold month after month. And even before the outbreak of the coronavirus, their gold stash was worth over $100 billion. And with the recent gold surge, that is now worth $113 billion. So Russia is prepared with a rainy day fund, unlike last time, meaning oil prices will collapse. Oil producers are going to go bankrupt, and government budgets are going to be drained in oil exporting countries. So what is going to happen to the asset we all hold so dear, Bitcoin? Well, it's getting trashed while gold has kept its cool. What the freak, Tyler? I thought this was supposed to be an asset not tied to Finance 1.0. Well, my friends, the attack on gold has come. They aren't letting it break 1700. As you can see, once it got to that level, obliteration down. Now, the US has a stockpile of gold. They need it to be worth something, or else their stockpile goes poof, it's not worth anything. They can't trash gold like they can trash Bitcoin, as the United States government has explicitly stated that they do not care about BTC. And what that means, we are coming to a peak, my friends, and in my opinion, we are at the fight you stage. They will do everything in their power, including fueling the narrative that crypto and BTC is just a shittier, more speculative investment than the stock market. Do not fall for it. This is their plan, and I'm sticking with my plan, Plan B. Cheers, viewers. I'll see you next time.